So my question was about fuel consumption, fossil fuels. Do you think we have reached peak demand? Is a turning point you're seeing right now in fossil fuels?
And Laing Henshall is also an MBA professor.
Yes. So my question was about the challenges facing the oil and gas industry right now in high-cost production industries areas like the oil sands in Alberta. And I'm wondering what your outlook is for that and the, I guess, the response that you think companies in that area are going to take going forward.
So if you look at all the different forecasting agencies, there's a question on peak demand. There's also a question on demand stagnating. This is peak demand, right?
Peak demand, yes.
Okay, so peak demand, you know, if you look at all the latest forecasts, including the forecasts that assume an accelerated introduction of renewables, you still don't get demand really peaking until somewhere between 2035 and 2050. So, you know, the share of oil falls, the share of coal falls dramatically. In fact, McKinsey's think that coal will sort of disappear by 2025 and be largely replaced by gas. I doubt it. But, you know, actually McKinsey's forecast says that oil as a share of the energy mix in 2050 will fall to 72% from the 84% or whatever it is today. So it's not, you know, there's no immediate possibility that peak demand is going to be reached. I think we'll come back to it when we talk about stagnating demand as well, because that's quite an important concept. And you know, if you look at the current situation in the oil market, basically the oil market is being buoyed up by record production in OPEC, particularly the Gulf OPEC, both the Arab side and the Persian side. The threat of shale oil, which is, I think, somewhat, I don't think it's quite as dire as the people think. In other words, I don't think that you can turn shale back on and produce another huge number of barrels very quickly. And the third is Russia. So actually, if you look at those three sources of oil, the low-cost Gulf, Russia, and US shale, you know, you have something in the region of 50 million barrels, which can quite easily be produced at an oil price of 40 to 50. So in the short term, there's no real need for high-cost supplies to complement that. Now, that still leaves 40 to 50 million barrels that come from everywhere else in the world. And those barrels are expensive. And the issue with those barrels is that no one's investing today. And, you know, as you don't invest, we didn't invest in 2015, and didn't invest in 2016, the decline rate of the existing fields is going to accelerate quite rapidly. And I think that, you know, the big question for next year is not whether OPEC reaches an agreement, which I doubt. The question is going to be at what is the accelerated decline rate of those other 50 million barrels of production. Because once they get beyond a certain point, then, you know, there is no rapid response that can come from low-cost OPEC, Russia, or US shale. Then you have to reinvest. And you know, Alberta oil sands will probably be one of the last places. You saw that Exxon, I don't know whether you saw that Exxon's going to write down their reserves in tar sands by a huge amount. I live in Calgary at the moment, and I can tell you there's 10% unemployment. The housing market is falling apart. The number of people, of senior people, I mean people who are reservoir engineers or project managers who are out of a job is incredible. But it's not going to come back, I don't think, for another couple of years. But, you know, the Saudi oil minister said at the Oil and Money Conference it's all going to be needed, and he's right, it is all going to be needed. It's a question of when.